Hello and welcome to Questioning the Manager. Today we are joined by James Henderson, who is the co-manager for the Lowland Investment Company. James, thank you for joining us. So we're firmly into the second half of 2018. What's your assessment been for the year so far?
It's been a year much similar to last year, with things that have been gaining momentum, going up, and things that have been challenged by the difficult economic environment, suffering. So for a contrarian, it's been, you have to be careful. You must buy slowly, but there is real value emerging in some of the companies that sound challenged, and it's on some of those that we've been increasing our holdings, and we've been slowly selling down some of the more successful holdings to buy them.
So I'm sure you're very excited to welcome back Laura Fole, your co-manager for the Trust, in September. Have you been discussing any ideas about the shape or the direction of the portfolio in the past 6 months?
Oh, very much so. We're talking regularly, and it is about the speed that we move from some of the lower yielding, higher rated shares that have been strong performers to the more challenged companies that where yields are higher, valuations are lower. The speed we do it is the question we're always debating, and we are doing it slowly. Every day on real strength we're reducing some of the better performing shares and looking to buy some decent companies, good companies these are, but they're out of favour with investors at the moment, the likes of Green King or Severn Trent. These are solid businesses with good franchises, but they, for being part of the domestic UK economy, they've been under pressure.
Okay, and can you share with us any ins or outs of the portfolio so far this year?
Yes, so the ins, we've increased the gearing. We've taken it from about 10% to 15%. The things we've been buying are higher yielding shares that have been fallen out of favour. So it has been some of the utilities. We bought a company called Hickle, which is an infrastructure company. Again, infrastructure stocks have fallen as people worry about the politics and the slowdown in the UK. But there, the rating is suggests good value, and the yield is safe, and the dividend will grow. So we've added that, we've added Green King, we've added Severn Trent, we've added Hammerson. These shares are all have been out of favour, but I believe they return to favour because they're good, sound businesses with a franchise that sees them through the difficulties of next year. And on the sell side, it hurts me to sell some of these shares. They've been in the portfolio for a long time, but the valuation has become quite demanding. So I have reduced the position in Hiscox. I think it's a very fine company with a very good business that will grow, but its multiple has got relatively high. And for portfolio balance reasons, I've reduced it from about 3.5% of the portfolio to a bit under 3%. The same with Croda. Croda has been in the portfolio for 20 years. It is a really good company, but the valuation has got very high. And the trouble with high valuations is it does, if any slight slip, and there is, the share price would come back quite a way. I don't think there will be a slip, but that said, for portfolio balance reasons, I've reduced Croda as well.